Hey everyone, me Kevin here. In this video, I'm going to share with you 4 risk factors that you should watch out for that could lead to a substantial stock market pullback. Some of these which could overlap with some of the other ones. Now, I'm not trying to sound like a bear or a fearmonger. The reality is I posted 3 videos in the last 3 weeks saying the Fed was issuing big warnings and red flags, and then all of a sudden stocks substantially fell. I also warned of a Tesla pullback post-split. I also warned of an Apple pullback post-split. Both of those things happened. I also warned of a Nikola pullback after their IPO, and that happened big time. And it also happened after their big run-up yesterday. Now, I'm not certain that all of the things that I'm about to say will happen, but I want you to know is I make these warnings, or I put out these warnings because they're things we should pay attention to, and we should be watchful so that way we can keep our overconfidence in check, especially in this crazy market. The last thing we want to do is get overconfident, ignore the warnings, or potentially not even know about them, and then start YOLO options trading, and that is not good. What I recommend we do right now is take out some kind of post-it note or a little notepad or something, write these things down and tape them to the wall wherever you do your trading or your execution of stock purchases. Tag me on Instagram with it, and I'll maybe share it. I'll put it in a story or something. I think it's a really good idea for us to be aware of pitfalls. So let's talk about the 4 issues starting now. Remember, you can use the Labor Day coupon code this week as well. It is linked down below for the stock, real estate, and course on making YouTube videos. First, catalyst number 1. You may have already heard that AstraZeneca's vaccine trial was put on hold due to an illness that occurred in their United Kingdom trial. This was in an otherwise healthy person. You may not have heard what this illness was, and you may not have also heard how this might affect the other vaccines like Pfizer and BioNTech or Moderna's vaccine, and that's what we're going to talk about right now. All right, so here's the skinny. AstraZeneca's vaccine was put on hold because some otherwise healthy person before they got the vaccine now has a disease that might not be curable. Now, this means that the entire trial was paused. It means people in the trial will not get their second doses of the vaccine, and new recruits won't be getting their first doses. And remember, these vaccine trials are being conducted with otherwise healthy individuals. So it's bad to see that suddenly one of them gets a relatively otherwise rare disease. I'll talk about that in just a moment. And remember this as well, we are expecting to need 2 doses of a vaccine for it to be considered effective against COVID or the coronavirus. And so someone suddenly falling ill after getting the vaccine raises major concerns. I'll talk about that illness in a moment, but this creates a few problems. Number 1, it instantly increases fear. Before this incident, Gallup polls suggested that 33% of people are likely to refuse taking a vaccine at all. And that's before this disease suddenly happened in an otherwise healthy person. The second problem is this is very likely to delay the vaccine post-election. Now, that's going to make about 50% of people happy and about 50% of people sad. I guess we'll find out what the exact percentage was soon. Number 3, best case scenario. We just lost 3 weeks in AstraZeneca's trial. Scientists interviewed by Nature believe that this hold or pause will hopefully be lifted in 3 weeks if the illness is deemed unrelated. However, worst case scenario, if the vaccine is implicit in causing the illness, not only might it take this vaccine out of the race, but it could also affect or pause other vaccine trials who are also targeting these spike proteins on the coronavirus, which the other vaccine contenders are also targeting. So if the targeting of these spike proteins becomes a problem, we could see a lot of vaccines fall out. That would be very bad. And this would destroy, in my opinion, recovery stocks, restaurants, airlines, hospitality. And because of this, partially, all of those are down about 3 to 5% today. This is a real cooling factor to the vaccine excitement. Also, according to CNBC, by the way, the illness of this otherwise healthy individual was likely transverse myelitis. Now, this causes spinal inflammation and other problems such as walking where one of your legs kind of drags behind you. Anyone can get this at any age. It's very rare. Only about 4.6 people out of every 1 million people actually get this. And then 1/3 of people who get this disease recover fully from it, so that's good. But 1/3 of people only recover partially, not so good, and 1/3 never recover from this. Now, what's kind of scary is that, look, if everybody got this vaccine, statistically, 1,500 people would probably get transverse myelitis anyway because of the rate that this pops up in the population, 4.6 out of a million, about 330 million people in the United States. However, the concern is that one person got it out of potentially 10 to 30,000 people who got this vaccine. That's a really big difference in the ratio. And so if this vaccine causes transverse myelitis, we'll see a very bad day for recovery stocks and potentially the entire stock market. Now, it's possible. Now we'll see a bounce in tech stocks and stay-at-home stocks again, which is kind of what we're seeing again today. People take money out of recovery stocks and they put them into tech. You know, tech's been recently beaten down, so you had some sales there yesterday. But the first thing I do is write down, track AstraZeneca's vaccine. What caused the illness? Now, I'll share some more recommendations towards the end of the video. Second catalyst. Hubris on Discord was kind enough to post a Bloomberg article showing a stock market crash right around the same time as certain forbearance programs ended in Malaysia. Now, this is something to keep an eye on in the United States. Write down December 31st. By December 31st, we'll have a quad set of stimulus ending. Student loan deferments will end. Eviction protections will end. And those protections could potentially be leading people to take their money and temporarily put it in the stock market, creating more buying pressure, right? Take that buying pressure away, might see prices come down. Then, some mortgage forbearance will also end around this time. Now, mortgage forbearance is a little bit more tricky just because it can end 3 months, it can end after 6 months, it can end after a year, and everybody kind of started forbearance at different times, but just sort of add that to the mix because some people are going to have their mortgage forbearance plans end by the end of the year. And if we get a new unemployment boost through, for example, the skinny bill that was just introduced, or even something that they compromise on, that is Democrats and Republicans compromise on, that unemployment boost will probably end by December 31st. So the end of the year is going to be a nice, probably substantial cliff for some of these forbearance programs. And if we're going to expect to see anything like what happened in Malaysia, which is reasonable, people staying at home, don't have to pay their bills, they put their money in stocks. Okay, now I got to go back to paying the bills and got to pay off some debt. Oops, now you might take your money out of the market. This could lead to another late year selling season, which ordinarily I see as a buying opportunity, unless of course that money permanently leaves the market, then prices come down and stay down for a little bit. The eviction crisis, by the way, I believe is particularly understated, and that could be an early next year catalyst for problems as well. We're currently $21 billion behind in rent in this country, and that gets worse every single month. Third, the election. Look, no matter what side you're on, the election is likely to lead to a combination of protests, riots, trade tensions with China, and new tax law changes. Biden and Harris, for example, have mentioned plans for financial transactions taxes. A financial transactions tax basically taxes stock sales and purchases, bond sales and purchases, and options executions. And Biden and Harris have suggested raising the corporate tax rate to between 28 to 35%. Both of these will take a bite out of profits. Now, I did break down Biden and Harris's tax plan completely and compared it to Donald Trump's, so check that video out. I'll either link it above here or in the description down below. Now, regarding Trump, Trump's talk is largely seen as beneficial to taxes, but potentially a negative for tough talk on China, which anytime we see trade war tensions increase between China and the United States, we tend to see the stock market pull back substantially. Look, for example, at that big dip we had around December of 2018. Also, both elections are likely to create some form of protests or rioting and some instability. That's also not good for the markets. Next, catalyst number 4. This is a second wave of the virus. And this is hopefully the least likely because, well, cases have been on the decline, hopefully at least. However, we can't kid ourselves. With kids in school and the normal flu season coming up, we're likely to see some elevation of cases. All right, so now we've got our 4 catalysts. But what do we do? Well, number 1, the vaccine news is not great for recovery stocks, and it wouldn't surprise me to see more of this sort of pullback on recovery stocks for the time being. And honestly, I'd rather be a little bit more tech heavy right now and stay at home centric, just because we've never manufactured and distributed a vaccine this quickly, especially now with these health concerns popping up. I mean, even Jim Cramer on CNBC this morning, he's like, I was going to enroll in the Moderna study, but after I started doing research on what's happening with the AstraZeneca trial, that's it. I ain't taking the vaccine, and I'm not going to participate in the trial. Yeah. I mean, I guess you can't really blame them, but yeah, it makes you scratch your head a little bit. Number 2, I have been starting to pull some money out of stocks a bit lately. I've taken out about 15% of my money, and I'm really using this to ramp up my purchases in real estate. I'm purposefully locking in 30-year fixed rate loans, and I'm not kidding myself either. Like, I know that real estate could fall next year as well following an eviction crisis, but I usually think that real estate and stocks don't always align with their pullbacks perfectly. For example, in 2018, we had a big pullback in real estate in the summer, but a big boost to stocks at the same time. And then in the fall and winter, we had a pullback in stocks and a boost to real estate. And we see this sort of like 6-month delay between these pretty frequently. So far, real estate has not been touched in this pandemic, knock on wood, that this continues this way. Although, hey, if prices fall, there'll be some opportunities. So this is where I really want to make sure I've got enough money in both pots. I wouldn't want to be all in on stocks. I wouldn't want to be all in on savings, and I wouldn't want to be all in on gold. I wouldn't want to be all in on Bitcoin, and I wouldn't want to be all in on real estate. Now, I'm not trying to just do the generic, oh, make sure to diversify. I really recommend pick at least 2. Like, if you're gonna have stocks, at least pick something with a different cycle, like real estate. It's a good option. Remember, I got a real estate investing course. That's my bread and butter is real estate. Although I love stocks too. Yeah. Come on, stocks is fun. I just sit here and swipe up and I'm done. Anyway, number 3, if you have debt, consider paying the taxes on some of your capital gains on stocks and start minimizing your debt. Remember, that was a big warning that the Federal Reserve gave, high levels of debt. Don't let debt eat you up, especially margin debt. I've been reducing my margin debt on a daily basis. Even though the margin rate's only 2%, I'm like, I do not want to be a victim of, let's say, a second market sort of double dip recession or whatever because there's a second wave, and then be blindsided because I wasn't paying attention to the warnings. This is why I never let my margin get more than 35% of my account. And honestly, I might change that rule to like 20% or just 0. That's the safest, right? Anyway, the last pullback we saw over the last few days in tech was a warning shot to all of us. Get your ducks in a row. This doesn't mean that bad things will happen, but it's better to be safe than sorry. It's not worth taking the extra risks, especially when stocks are at the highs they are at. Thank you so much for watching. Please consider subscribing, consider sharing this video if you found this helpful. Also, do consider checking out the amazing courses linked below: stocks, real estate, finance, the psychology of money, making YouTube videos, sales, property management, you name it, there is something for you. Thanks so much, and we'll see you next time.